Thank you so much, Monica, and nice to see you. And thank you very much to all the esteemed presenters, and thank you very much to IAI and IFAC for this wonderful B20 presentation. It's a wonderful opportunity for us to talk about our exposure drafts and really to encourage you to provide your input, which is so important to the quality of our work. So MAS has done a very good job of setting the scene, and you will see that we have a global baseline because we have some similar slides in our presentations. But what I will do is go quickly through some of the first slides and also take the opportunity to present them a slightly different way in some cases to set the scene for what I want to explain about the exposure drafts. So if I move on to the next slide and then to the next one, can I go to the next one? And actually, I'll move on to the COP26 slide on the next page. So as Massa rightly said on the next slide, at COP26, on the next slide, we were really delighted with the announcement of the International Sustainability Standards Board, which is the precursor to the exposure drafts that I'm going to talk about today. And as many of the speakers have said in the wonderful introductions today, this is a really important opportunity to improve the quality of information around the world and to remove some of the complexity, both for those who want information about sustainability, but also importantly for the companies who need to provide this information, to really tidy up the reporting regime with this idea of a globally consistent set of standards. And we were really delighted at COP26 that in addition to announcing the establishment of the board, the trustees announced that they had managed to agree with the consolidation of the Climate Disclosure Standards Board and the Value Reporting Foundation, which has really helped us in our exposure drafts. And I'll talk about that a little bit more today. And also at COP26, we posted on the IFRS Foundation website the very first drafts, really, of what you now see as our exposure documents. And these were the recommendations that we had prepared for the new board of what we thought, the Technical Readiness Working Group, what we thought the new board's new standards should look like. And they were really the first drafts of the exposure drafts. So moving to the next slide. So as Massa said, our vision here is to come up with what we call a global baseline of sustainability disclosures. And what do we mean by that? We want to set out a set of requirements that mean that companies around the world would all be providing a consistent and comparable set of information about sustainability risks and opportunities. That would mean that investors would have high quality information, transparency to understand the risks and opportunities that they're exposed to, and that could be compared by investors around the world. We also plan to have a digital taxonomy. That would mean that we would have a digital version of this information available for investors around the world. And we've started working on that as well. Now, this global baseline that I talk about, we talk about investors a lot because they are big beneficiaries if we can identify a really good set of information to support their decision making. But it's also really important for investors, particularly for multinational companies, because it reduces the risk that they would need to provide different information for their reporting requirements in different jurisdictions. Moving to the next slide, I'm going to talk about this building block approach, which is what we also talk about in addition to the global baseline. So as Massa explained, we have the fortune in the IFRS Foundation to have the two boards, the sister boards, the Accounting Standards Board and the Sustainability Standards Board sitting side by side. And that means that we have a wonderful opportunity to draft our sustainability standards in a way that works well with financial statements prepared using IFRS accounting standards. But we know that not every company around the world applies IFRS accounting standards. So when we draft our sustainability standards, we're actually doing them in a way that means that even if a company is not applying IFRS accounting standards, they can also use our sustainability standards. And our plan is that the combination of the information provided about sustainability risks and opportunities using the ISSB standards combined with the financial statements provides the package of information that investors need to make informed investment decisions and capital allocation decisions, taking into account sustainability risks and opportunities. Now, we talk a lot about this building block approach, and I'm going to take a moment to explain what we mean when we use that term. Our vision is that companies around the world would provide a consistent set of information to meet investor information needs. So wherever you were in the world, you would see that same set of information. But we know that jurisdictions sometimes have particular information they think is important, either for their investors or for other users of information. So if I use two practical examples that exist at the moment. As you may know, the SEC in the US have had proposals up for comments in the last few months about climate disclosures. They've got some additional information proposals that are different to those that we've put in our exposure draft. What the SEC could do, though, is use the baseline that we have proposed and add on some additional specific disclosure requirements in addition to what we have asked for. That would enable companies to build on the disclosures required around the world by the ISSB and still to meet the US requirements, but in a very efficient way. Similarly, in some jurisdictions, they want to meet the needs of users of information beyond just investors. And also, some companies want to use the standards set out by the GRI, the Global Reporting Initiative. And we're really pleased to have a memorandum of understanding with GRI. In both of those cases, the building block idea is still relevant. Using the example again, if you wanted to meet broader information needs beyond investors, you could start with the set of information that the ISSB requires to meet your investor information needs and add on additional information to meet the broader needs of other users of information beyond investors. Again, this would make a very efficient reporting system for companies and would mean that investors could use the broader set of information, but clearly identify the subset of information that we had identified as being relevant for them. So we're working really hard with jurisdictions, we're working really hard with GRI to see if we can get this vision to become a reality. Moving to the next slide. Now I'm going to talk about what's in our exposure drafts, and I'm going to refer back to some of the ideas that I've already introduced as I present this. So the first exposure draft we have, S1, is called the General Requirements Exposure Draft, and it's general requirements in a couple of ways. The first way that it's a general set of requirements is that it introduces an overarching requirement that a company be required to provide information on all of their significant sustainability risks and opportunities that are necessary to assess enterprise value. So we're not only talking about climate here, we're talking about all significant sustainability risks and opportunities. Moving to the next slide. Now, what's really important here is what type of information are we asking for? We're asking for a very particular type of information. We're asking for information that is necessary for investors to assess the effects of sustainability-related risks and opportunities on a company's enterprise value. And what we mean by that is, what do you need to know about sustainability risks and opportunities to work out the value of a company's shares or its debt? So what would you be willing to pay for those shares or debt, understanding the sustainability risks and opportunities a company is exposed to? We focus on the significant sustainability risks and opportunities. And we use that word because we want to be clear with companies that it's not a search for every possible sustainability risk they can imagine. It's the important things that information should be provided about. And sometimes when we talk about investors, people are concerned that that means it's a narrow focus. And I want to reassure you that it's not a narrow focus. In particular, the information that we require would include the impacts that a company has on people, the economy, and the planet when that affects the assessments of a company's enterprise value. And increasingly, if people care about what a company is doing, investors do too. And that's because the behaviors of a company can cause regulatory action. It can mean that a company needs to change its business model. It can also mean that customers may not like to buy their products, and that can affect their future sales. So increasingly, the way that a company behaves and its impacts are relevant to enterprise value, so we would require information to be provided about it. And we ask for material information. And when we say that, we mean material in the same way we use it for financial statements. Decide which particular pieces of information could reasonably be expected to actually influence the way that an investor would think about a company. Is it a really important piece of information? That's what we want to focus on. Moving to the next slide. One of the key messages that we got when we established the new board was that we shouldn't start with a blank sheet of paper. We should build on the work of others. And one of the sets of recommendations or frameworks that people wanted us to build on was that from the Task Force for Climate-Related Financial Disclosures, the TCFD. And you'll see in both of our exposure drafts, including the general requirements one, that we use the structure from the TCFD recommendations. So when a company provides information on all of their significant sustainability risks and opportunities, they should always provide information about how those risks are governed, the strategy a company has to address those risks and opportunities, the risk management processes, and the metrics and targets they use to assess the current performance of a company, its future targets, and how it's achieving those targets. Moving to the next slide. Now, we ask for information on all significant sustainability risks and opportunities, but we only propose one specific set of requirements, which is in the climate exposure draft, which I'm going to talk about in a moment. So what does a company do to identify and provide disclosures on other sustainability risks and opportunities? This is where we benefit from the consolidation with the Climate Disclosure Standards Board and the Value Reporting Foundation, who bring with them the ISSB standards. In our general requirements document, we tell companies to look at the ISSB standards, the CDSB framework, and industry practice to identify which sustainability risks and opportunities may be relevant to their investors and what disclosures to provide about those sustainability risks and opportunities. And to help people understand how to do that, in the appendix to the general requirements exposure draft, we use two examples to illustrate how to use the ISSB standards and the Climate Disclosure Standards Board framework to achieve that requirement. Moving to the next slide.
Ya, terima kasih Pak. Ini diatur.
Sorry. I said that this was a general requirements document because it introduced some general requirements. And in addition to the general requirement to disclose on all significant sustainability risks and opportunities, the other way in which this exposure draft is a general set of requirements is that it sets up some basic ideas about the nature of the reporting that we're asking for. And I want to highlight a couple of the key proposals there. One is a requirement to make it clear to investors how the information provided about sustainability risks and opportunities is related to the information in the financial statements. We ask for linkages to be clear, and we say that where relevant, assumptions should be consistent between that included in the sustainability reporting and in the financial statements. We also want the sustainability reporting to be part of the general purpose financial reporting package. And we want the sustainability reports to be provided at the same time as the financial statements. This is because of the linkage we see in this information and also to support assurance of the sustainability information. Also, because of this building block approach that I was talking about, we know that jurisdictions may ask companies to provide additional information that's a complement or an add-on to that required by the International Sustainability Standards Board. For that reason, in our document, we say that a company is allowed to provide additional information in its sustainability reporting. But we ask that if that happens, it does not obscure or clutter the information that is required by the ISSB. And that's because we want to be sure that investors don't miss the information that we have identified as being important for them when they're making their investment decisions. Moving to the next slide. So moving now to our second exposure draft, the climate exposure draft. Now, the relationship between the two exposure drafts is that if you read the general requirements exposure draft and you identify climate as a significant sustainability risk or opportunity, then you would apply the climate exposure draft to work out what particular disclosures to provide to the market. So this exposure draft requires disclosure about climate risk, both physical risk, for example, the exposure to flood risk that a company might have, also transition risks, for example, how a company might need to change its business model as a result of climate change, but also climate-related opportunities. Some companies will benefit because of the products they have in a climate change environment. And climate opportunities are also of interest to investors. Moving to the next slide. Again, our stakeholders said, don't start with a clean sheet of paper, and we benefit from the consolidation with the Value Reporting Foundation. That means that when you pick up our climate document, you may recognise quite a lot of it, and that's on purpose. The front part of our climate document is very much built on the TCFD recommendations, the Task Force for Climate-Related Financial Disclosures. We've used those as a base with some enhancements. The appendix to our climate document is a series of required industry-based disclosures. Those are taken from the SASB's industry-based requirements. We've used the same requirements as the SASB with some adjustments that are shown as markup to make these metrics more international. And also we've taken the opportunity to propose new disclosures for the finance industry about financed and facilitated emissions. Moving to the next slide. I want to highlight just for a moment some of the key climate disclosures that are included in the exposure draft. The first is in the area of transition planning. Investors are really interested to understand how a company's business model and future prospects might change as a result of climate change. So we're asking for transition planning information. And as part of that, we're asking in particular for information about a company's carbon emission targets. Not just what its targets are, though, but how it plans to achieve them. Is it actually planning to reduce its carbon outputs? Is it planning to make adjustments to its supply chain? Or is it using carbon offsets? We want investors to be able to assess how credible they think a company's carbon emission plan is. And we want them to be able to see whether they agree with the approach that a company has taken. For example, there's differences of opinion on whether carbon offsets are an appropriate way to address climate change. We are neutral on that, but we want investors to really be clear about what a company is planning to do. We also ask for information about the resilience of a company's strategy to climate change. We want to understand how a company's board is planning and thinking about different strategies it may need to take in different climate scenarios. And the last one I'll highlight is consistent with many others. We're proposing that companies be required to provide information about their Scope 1, Scope 2, and Scope 3 greenhouse gas emissions. Moving to the next slide. It's really important that we get you to give us your thoughts on our exposure drafts. I really implore you to take the time to respond to us. You don't need to answer every question. There may be some that are of more interest or more relevant to you than others, but please answer what you can and send us your thoughts. We're particularly interested to understand if you have observations about the applicability of our proposals to smaller companies and in emerging markets. We really want to make sure that what we're building here is appropriate and reasonable for a global baseline that can be used for the basis of reporting around the world. We need your help to make sure that we achieve that. You can either send us a comment letter or respond to our survey, and you have until the 29th of July to get your responses to us. Moving to the next slide. At the moment, we're talking a lot about our exposure drafts because it's really important for us that you get engaged in the discussion about the exposure drafts. But I also want to make you aware about some other things that are going to be happening. The first is, as I mentioned, we are working on a digital taxonomy, which would capture the proposed disclosures we require in a digital form for digital consumption of information. At the moment, we have out for comment a request for information that our staff have put together. This raises some fundamental questions about the design of the taxonomy that would accompany the ISSB standards. If you have an interest in digital reporting, if you provide the feedback to the staff, that will help us speed up our board discussions about the digital taxonomy. The other thing I want to highlight, which is really important, is that later this year, we plan to ask you what you think we should work on next once we finish the climate and general requirements exposure drafts. We really need your feedback to inform our prioritization of our scarce resources and your scarce resources. So please look out for our agenda document, which will be published later this year. And with that, I'll wrap up there and hand back to Monica. Thank you so much.